Yo, what is good? I will be breaking down gold in this video, and I just wanted to let you know that if you want to know and have future trade breakdowns, I'm going to be doing a lot of trade breakdowns on this channel. It's basically going to be the thesis of this channel with having a few more things implied. I know this looks crazy. I will let you know what this means. This is using my key level confluence based support and resistance strategy or key level strategy. These key levels are based on supply and demand. So they are significantly more accurate, just to let you know before I continue. It's not just regular support and resistance. We would put these based on order blocks and things like that. It's all right. So going to the weekly, you did see all of these black lines, which are weekly levels. This is the weekly, the green right here is the weekly low, basically, and the orange ones are going to be 4H. That's why they're so small, right? So the goal was long because USD fundamentals are bearish right now, right? Whenever USD is failing as an economy, like we're getting ready to go into recession, this technically what they would consider December is going to be the start of the recession, right? USD fundamentals are bearish, so gold is going to be bullish, right? Since they go off of each other opposite like that. So when USD is doing well, gold will be selling. And when USD was doing well for quite some time, this is the weekly time frame. USD was doing well for quite some time, several months here, and even from here, basically. And at that time, gold was obviously shorting here on the weekly, as you can see, for quite some time, basically from Monday, August 2020. We're just looking at this section to this low right here, which is Monday, October 22nd, Monday the 31st, October 22nd, October 2022, my bad. It was doing, USD was doing really well. And then all of a sudden USD is going to recession and now gold's doing well itself, right? So basically what I was showing you is that gold was shorting while the USD was doing well and they go off each other like that. So that's a little hack, right? So these are my weekly key levels that I did draw in. The majority of these levels are based on order block supply, demand, boom, 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 and structure. That way they're not just supporting resistance levels, they're based off of where price is actually going to go. And all you have to do is engage in liquidity, but you still have the mind of like this being support and resistance, just not normal support and resistance. I don't know. You'll have to, that's a life hack for me that I might put out. So I immediately draw down to the 4H. Drew some key levels on the 4H because there was just this big gap in between the weekly levels. So I drew on some 4H key levels and I color coordinated them orange. And basically these key levels are going to be where price is going to respect, right? We had a bearish key level right here, key level trend line right here. Basically, this is I use these as kind of a support and resistance thing. It's kind of where my strategy differs. This was resistance right here on the key on the trend line, and I do know this is liquidity too. Liquidity was taken, price came down, used it as resistance again, and now it's using that support right here. And I do, like I said, know where the liquidity lies and things like that just by looking at the candles. So I'm able to filter out all of the fake outs just about, I still do lose, but, majority of the fake outs when I do trade, right? So what happened was price came down, price took sell side, and that's this red line right here. All of the red lines and the purple circles are going to be liquidity takes, right? Liquidity was right here, resting right here. They took that liquidity right here. Liquidity was resting right here. They took that liquidity right here, basically chasing buy side and sell side liquidity. Price came up, didn't trade above this high, came down, took some sell side. At the time of the trade, I did enter on the 4 hour. This is a swing trade. I did notice that price came up basically from this kind of bearish leg right here. Price came up, took some sell side liquidity and respected actually this order block right here, this bullish engulfing right here on the 4H. And there's like pretty much a perfect entry. If you notice where the wick is right here, you can see the wick right here. And then even this one right here, they tapped into it perfectly after taking some sell side liquidity right here. Price shot up, took buy side liquidity immediately after. And basically this was the bullish engulfing right here. This downward bearish candle and this upward bullish candle is a bullish engulfing, and it matched up with my key level as well at 17.86026. And essentially price came up and broke structure to the upside, showing me they were chasing a buy side liquidity. So I drew my Fibonacci from here to here, basically body to body, from down here, my bad, it was from down here, the beginning of the impulse move. So basically right here to the body of the highest candle. With this Fibonacci, you have to do body to body. It's just best. You can do wick to wick, but it's just, I don't know. I've seen body to body Fibonacci drawing being a bit more accurate, right? In terms of the actual rejection. So, you just got to back test some stuff and see which one's going to be better. They both work though. So I knew that price was going to come back, right? There's liquidity resting right here. One of the red lines. I marked out where liquidity was resting. Price started to come down immediately after. And I did call this in my chat a while back. Prior to this, basically price was up here and then price created a bunch of sell side liquidity, which gave me more confluence for the trade. Price came down. We tested this bullish order block perfectly at this key level of 1786. This was my sell side liquidity take that I needed to happen. I actually should have marked that up too. This is my sell side liquidity take that I needed to happen right here in order for this to qualify. Before every buy, there will be a manipulation to the downside, and before every short, there would be a manipulation to the upside. So this was the manipulation that I needed. And basically I used this bullish order block that was responsible for this liquidity take right here, specifically on this major leg to get in. And I had Fibonacci confluence as well as bullish trend line confluence, which is black line, key level confluence, and a counter trend line confluence. They did all line up perfectly with my key level, right? Basically, these trend lines were being used as support or resistance at one time, and now they're being used as the opposite, which is in confluence with my key level. So if this bearish trend line was, if this is where the bearish trend was right here, let's just say, if this is where the bearish trend was right here, and I would have just drawn the trend line right here, headline, let's just say this wick right here, you can see where the confluence is. Price came down and rejected all of that, then came back up along with my Fibonacci, right? So after that, price took this buy side liquidity right here and traded above, and that's where this liquidity take is. And then I waited to see if price was going to come back to my entry area, but I didn't see the reason to, because there was also sell side liquidity right here. And basically price took that into this this key level at 1795,607. And once again, because price broke structure to the upside with this wick right here, price had to come back down and mitigate this order block, which was the last bearish candle right here, last bearish candle before the break of structure. This was the one that was responsible. So this was the liquidity take. There's sell side liquidity take before the buy. I had to make sure basically price was going to not just come back to my entry area, and I wanted to make sure of that. So I waited. Price came up and took some liquidity right here to the upside in this area where this arrow is right here at the red line, and essentially now I'm waiting for a price to come back down. And there's a couple bearish predicted candles for gold, as you can see, coming up, and that kind of lines up with the recent liquidity take. But according to this, the low of the last candle next week is going to be at 1.79401. And from what I can see, we should be 79. We should be good. Basically, it's going to come back down to this area and respect this again. Is what I'm kind of seeing. And then price will come up and eventually take this liquidity right here, in which somewhere in this leg right here that takes this liquidity, I'll be looking for price to retrace back to for a second entry for maybe like a 1 to 5 or a 1 to 6. Since this is a 1 to 20, 1 to 28, my bad, but at a 0.5% risk. So how did I get that big RR? Long-term USD fundamentals and the price coming up to chase this buy side liquidity to touch this weekly high, basically. So I saw it off as a opportunity to get trade gold bullishly long-term. If fundamentals change, then I'll close my position wherever it's at. So and basically all I need to do to maintain this trade is to pay attention to USD fundamentals. So if you have gotten value out of this video, sorry, got a pickle in my throat, go ahead and drop a like, subscribe. Let me know if you got value out of this video. This is kind of how you use key level support and resistance with knowledge of liquidity. And this is something I will also be going over in my learn and earn. So I don't know if you'll even have time today. It's like one more day or like 15 more hours or something like that before I'm closing my education forever. So let me know if you want to get in. It dropped the price from $9.97 to $100 because it's not about the money, it's about helping people. So currently we are in profit about 1.3% with this trade, risking about 0.5%. And like I said, that second entry is going to be a shorter RR just to have some profit secured, but I plan this to be a long-term trade based on USD fundamentals to this weekly high right here. I do expect them to come to this weekly high right here, and basically I'm looking for a gold target of 2069,864 roundabouts. A little bit higher than that, 2074,804 for a CP smash. Probably a 30-day hold, maybe 6-day hold. So when volatility picks back up in the market next week, price will adjust and basically come back up, right? So I will use Fibonacci for this leg right here. Whenever it does come up, whatever bullish order block is responsible for bullish engulfing is responsible for the break of structure. The leg that started the break of structure, that's which one I'm going to likely use for a limit order. And there's already confluence right here with equal lows with the sell side liquidity that was created. So I'm thinking likely either this bullish engulfing or this bullish engulfing is going to be the one that they'll use for the second entry, as long as USD fundamentals stay bearish. So if you did learn something in this video, let me know. You have, once again, patterns again bearish, but retailers are currently 71% selling this, and we always trade against the retailers. So that's just something that was in my plan at the time. We had a rejection of bullish candles and a rejection of 1787,090. So that's kind of where I got in. I did get in right here. It was a sniper entry limit order on basically this wick right here. On this H4 candle is where I got in. This bearish wick that ended up rejecting and obviously continuing bullish in my favor after that. And I explained why I had that break of structure liquidity take, liquidity right here, resting right here. And then this was the one that was responsible for the latest liquidity take, which was right here. So we set a limit order and have the liquidity confluence plus the bullish predicted candle confluence, and the fact that retailers are majority selling plus USD fundamentals being bearish, making the gold depreciate. So that's how you kind of professionally analyze your trade and make sure you have a lot of things backing it. So it's a high probability trade. If you got value out of this video, that's it for the breakdown. If you got value out of this video, drop a like, subscribe, and I'll see you guys in the next breakdown.